Hi, I'm Renee Gorman, Senior Manager for the Market Analytics team at AGS, and this is our 2026 Workforce Trends to Watch. I think a good place for us to start is a look back at 2025. And economists did expect a slowdown for the U.S. We knew that this wasn't going to be by any means a comeback year. And when I was reading through my notes from Q4 of 2024, the Philadelphia Fed did project that unemployment was going to be around 4.5%, and other economists did anticipate that the job gains would drop to about 75,000 per month. So the forecast heading into 2025 was really this gentle deceleration where wage growth was going to stabilize and the labor market was going to find a balance despite policy uncertainty. Because at the time, we knew who president-elect was, but we didn't know exactly how things were going to play out. Now, what occurred was a pretty solid start to Q1. When I was looking to our Acumen data, there was some real optimism in the air because we saw some pretty steady hiring for January, February into March. Now in March is when we started to hear about the rumblings of tariffs, and then in April is when the formal announcement was made, and that's really when companies shifted into this no hire, no fire mode. We saw job growth really slow through the summer months. I would say May and June were okay, but then in July, job additions plunged to 73,000, and then all those earlier months were also revised down. Now, we did see a slight little rebound in September, October, November. They weren't able to sustain that same momentum. But again, when I look to our Acumen data, we did hire more in Q4 than in Q2. So although I don't think we maybe ended on a high note, again, there was some nice optimism heading into the end of last year. Now, unemployment, it did hover around 4.2%, at least for the first half of the year. We all saw it rise to 4.6% in November, but I still don't think this is anything to be alarmed by. I would say 2025 was an overall stagnant labor market. Companies were definitely investing more in AI over people. And as a result of this, job seekers really felt that pinch. They just didn't have the confidence in the labor market. There was this fear of, if I were to leave my current organization, I'd be the last one in and then maybe the first one out if layoffs would occur. So everyone was sitting pretty tight. Wage growth did stabilize, but real wage growth, that only increased by 0.8%. So that just means that our dollar isn't going as far as it did 5+ years ago. Three major headwinds definitely shaped the labor market in 2025. There was certainly all of the policy uncertainty. Tariffs and immigration restrictions shook a lot of business confidence. High interest rates definitely cooled investment. And then there were some pretty obvious labor sector imbalances. The growth was really concentrated in healthcare, social assistance, and hospitality. We continue to see manufacturing and professional services kind of lag behind. I would also be remiss if I didn't mention layoffs. So there were over 1 million in 2025. That, of course, included the 300,000 federal workers. And then from a retirement standpoint, we do still have 10,000 baby boomers that are retiring daily. I also like to keep a close eye on the youth unemployment rate. So that's for folks between 16 and 24. Male youth unemployment rate right now is still pretty high at about 11%. So right now we kind of have this... We have ongoing labor shortages despite slower hiring. I would say bottom line for 2025, it by no means was a collapse. It just wasn't smooth sailing. It was definitely a year of hesitation. Businesses were being cautious. They were investing very selectively in tech. Workers, as I mentioned, did face a lot of uncertainty as a result. And then policymakers, they were juggling inflation control while also at the same time trying to drive growth. So the big question, I think, for 2026 for the U.S. and North America is this year going to bring more clarity, or are we still going to have a lot of turbulence? And then in Europe, the labor markets in that region, they appeared strong, but there were also some pretty visible cracks. So growth was modest. In the Eurozone, there was about 1% growth, and then hiring was really selective. Despite record employment, skilled roles really remained hard to fill. And that created this paradox of high employment alongside vacant roles. And then there were some pretty stark regional differences as well. So Germany, they were at near full employment at 3.5%. Spain still faced 10% unemployment. And then the UK, they saw loosening. In fact, vacancies for them, they were down 44% since 2022, but employment, it did slightly decline.